Well, other names in the sector saw a positive price bump after the release of their third quarter financial results. Unfortunately, the same can't be said for B2Gold. Despite falling a whopping 32% from October highs to the day before earnings were released, the company saw just a 1.6% bump on the day following the release of results, and is now trading slightly lower. What does that say about the Q3 results? Well, let's dive in. B2Gold in the third quarter recorded top-line revenue of $783 million, which was a 75% improvement on a year-over-year basis from the $448 million recorded in the third quarter of 2024. That revenue figure follows the sale of 250,000 ounces of gold, including 7,700 ounces of pre-commercial production gold generated at the Goose mine, which was a 38% improvement over the 181,000 ounces of gold sold in Q3 of last year. Of course, the average realized price of gold impacted results here as well, which improved 26% year over year from $24.83 an ounce to $31.33. For those of you that are tuned into the sector, you're probably questioning that low average realized price relative to peers. That figure is a result of gold prepay facilities that were entered into back in January of 2024, which in the third quarter saw 66,000 ounces of gold delivered at an average realized price of $21.77 an ounce. The current arrangement requires 22,000 ounces of gold to be delivered every month, beginning July 31st, 2025, until the end of June 2026, when 265,000 ounces have been delivered in full. At the time, the arrangement provided the company with $500 million in upfront capital, which it said would be used to fund sustaining development and growth projects across their portfolio. Anyways, despite that 78% bump in revenue on a year-over-year basis, cost of sales only increased 25%, going from $313 million to $393 million year-over-year, resulting in gross profit rising from $135 million to $390 million. Net income overall rose from a net loss of $631 million or 48 cents per share in Q3 of last year to net income of $23 million or 1 cent per share. After adjusting for a $661 million impairment taken in Q3 of 2024 and for a $106 million loss on derivative instruments in the current quarter related to the gold prepay facility, adjusted net income rose from $29 million or 2 cents per share last year to $180 million or 14 cents per share in the current quarter. As for cash flow, cash provided by operating activities moved from negative $16 million last year to positive $171 million in the third quarter this year. B2 ended the quarter with cash and cash equivalents of $367 million, as compared to $308 million at the start of the quarter, while working capital moved from a deficiency of $19 million to positive $35 million, with the gold prepayment facility obligations recorded as a current liability. However, $200 million was drawn from a revolving credit facility in the third quarter, of which $50 million was repaid subsequent to quarter end. Despite the credit facility drawdown, B2 in the third quarter repurchased $10 million worth of shares and declared a Q4 dividend of 2 cents per share, which is payable on December 15th. Moving to the operational side of things, B2Gold in the third quarter produced 254,000 ounces of gold, which again includes pre-commercial production from the Goose mine, which itself saw production of 14,000 ounces in the third quarter. Production in the year-ago period comparatively came in at 181,000 ounces. Growth here on a year-over-year basis comes from the Fekola complex in Mali, which saw gold production nearly double on a year-over-year basis, going from 78,000 ounces to 147. Masbate in the Philippines, meanwhile, contributed 50,000 ounces of gold, while Otjikoto in Namibia contributed 44,000 ounces, with all three operations said to have exceeded expectations in Q3. Goose again contributed 14,000 ounces of gold. As for costing, total cash costs were down on a year-over-year basis, dropping from $12.48 to $11.49 an ounce, an 8% improvement, while all-in sustaining costs fell from $16.50 to $14.79 an ounce, an improvement of 10.4%. On a site-by-site basis, Otjikoto was the low-cost producer at an AISC of $10.89 an ounce, while Fekola was the highest excluding Goose, at $16.78 an ounce, although costing at Fekola was down nearly 27% year-over-year from $22.87 an ounce as a result of that big boost in production. Goose was not included in the costing metrics due to its pre-commercial production status. The outlook, however, is where things really start to fall apart a bit for B2Gold in the third quarter. Production for 2025 at Fekola, Masbate, and Otjikoto continues to exceed expectations, with total production guidance of 890 to 965,000 ounces of gold. Year-to-date, production sits at 662,000 ounces. And if they have another performance like they did in Q3 in the fourth quarter, things should come in line at the lower end of expectations. But Goose is falling short. Guidance here has been slashed from a range of 80 to 110,000 ounces to a range of 50 to 80,000 ounces, which is a sizable cut. The shortfall here is a result of crushing plant capacity shortfalls, alongside delays in accessing higher-grade ore from Welt underground. 2026 guidance of 250,000 ounces and 2027 guidance of 330,000 ounces are said to be unaffected, but near term, it hurts. And that large cut in production estimates comes at a bad time. Commercial production was declared on October 2nd, meaning Goose's results will now be consolidated with the rest of B2's operation, just as costs are blowing out on a per-ounce basis. Cash costs guidance has been lifted from the prior range of $1,520 to $1,580 per ounce produced to $2,300 to $2,360 per ounce produced. And AISC guidance has been raised from a range of $1,900 to $2,000 an ounce to an eye-watering range of $3,290 to $3,350 per ounce sold, which is somehow higher than average realized gold prices. The larger increase here is due to $50 million in increased capital expenditures expected to be spent in the fourth quarter at Goose. Costs are expected to come down, of course, once the operation is fully ramped up. But in the interim, there's more pain coming in Q4. Outside of Goose, rising gold prices have resulted in B2Gold expected AISC at Fekola, Masbate, and Otjikoto to now come in at the upper end of consolidated guidance, which calls for AISC of $1,460 to $1,520 per ounce sold. Year-to-date, they sit at $1,508 an ounce. As for longer-term growth, an exploitation permit at Fekola Regional is expected to be received before year-end, allowing production to begin in early 2026. At Goose, optimization studies are underway, including a study to analyze the potential to increase mill throughput from 4,000 to 6,000 tons per day, and a separate study to bring in a flotation/concentrate leach process to improve recoveries and reduce processing costs. And in Namibia, a construction decision was announced in September for the Antelope underground deposit at the Otjikoto mine, supplementing low-grade stockpile production from 2028 through to 2032. Alright, so let's wrap it up. Q3 was a mixed bag for B2Gold. There were certainly some improvements on a year-over-year basis in terms of financial health and production levels, but they were overshadowed by near-term setbacks at Goose that have sort of clouded the story for investors, at least on a short-term basis. Provided things get sorted, that new mine, however, should have a sizable impact on B2's production profile moving forward, pushing them above that 1 million ounce a year mark and cementing their position as a gold major. Alright everybody, thanks for watching. As always, if you want to see more mining earning videos, check out our channel. If there's stories you want us to cover, let us know in the comments section. Also, if you enjoyed this video, do me a favor. Smash that like button, subscribe, and ring that notification bell. Alright everybody, thanks for watching.